Good morning. Thanks for tuning into the trade setup. It was a record-setting day for the US markets. The S&P 500 notched up about 0.8% kind of gains, and that brought in a lot of cheer at the US markets. Europe also did reasonably okay, but it was the US markets which were the showstoppers, so to say, about 80 odd points higher for the Nasdaq Composite as well. So all in all, a green day out there. Just that it's not quite reflecting in Asia, and I'll come to that in just moments from now. First, there's a lot of conversation around bond yields and what the bond yields are indicating. I think, I mean, I'm not an expert really, but I was just reading up some of the articles on Bloomberg, on some of the other sites as well. And there's a Bloomberg journalist by the name of Tracy Alloway, whose charts sometimes I follow. She's put up this very interesting chart on one of the Bloomberg stories, and it's there on the Bloomberg terminal as well, about how if we keep it simple about what the yields are doing, then it might give us a better indicator. And apparently, the bond market and the airline index have been moving together, and the airline index moving lower is an indication that the virus flare-up leads people to believe that maybe, just maybe, the recovery will not be that swift. Could it be that simple for the bond markets as well and the bond yields as well, that the recovery may not be swift? Because frankly, the virus is again on a rampage, so to say, across the world, I might add, and therefore, we've got to be cautious of that. Well, maybe it's as simple. Who knows? Asia is a bit cautious. I think multiple things, including this Chinese gaming regulations, etc. I mean, could be anything. It's not as buoyant, let me put it that way, as the US markets. Mixed bag, if you will, but still a tinge of green, as you can see. And bring up the SGX Nifty next on your screen after this big move that we had in trade yesterday. And it took everybody by surprise, really. What do we have in store today? Well, another start in the green. Now, breaking 16,000 was such a tough thing. Now that we've gone past it, I think there is a bit of a momentum that we seem to have developed. Though I must say that if you bring up the MOV function, you will see I'm not decrying the fact that everything did well. But I mean, it was almost a revenge of the Nifty. For 2 months, the Nifty was not able to do anything. The mid caps and small caps were all running amok. Look at the trade yesterday. Compared to what the Nifty did, the market breadth wasn't that great. I mean, it was 264 to 233, yes, in the positive. But just the way the Nifty had moved and a bit of short covering that accompanied it, maybe, you would have thought that the market breadth would be, the NSE 500 too, to be the tune of 400, 200 or thereabouts. It wasn't anything like that. There were enough losers out there to spot of bother for a bunch of stocks as well, including Vodafone Idea, including Motilal Oswal, including PVR, which, remember, we spoke yesterday that maybe because it had run up a bit in the anticipation of the Maharashtra unlock, it will cool off, and that's what it did. But yeah, I mean, a bunch of stocks doing well. And we'll talk about some of these, by the way, in the course of the trade setup too. I mean, look at Ashok Leyland, for example. Remember, we spoke about how CV companies might have month-on-month gains, and therefore there might be traction there, technical breakouts, etc. So some of those have done really well. But I must say, I mean, yesterday, and that's why my trade setup today is slightly different. I'm saying that it's just virtually impossible to predict what the index could do. And I say that every time, that it's impossible to predict the index. But yesterday, of all days, I said that there are no fireworks expected, and guess what the index did? It showed fireworks. So who knows? I mean, no point trying to second guess what the index will do. But as I read some of the technical experts, they say that the breakout from the 2-month consolidation range from the Nifty may augur well for the bulls. The SGX seems to be showing that. I would presume that the Bank Nifty would be a key constituent going ahead, and the SBI results may be the key pivot that the Bank Nifty will take. I mean, so could the SBI results help the Bank Nifty or kind of pull it back? Remains to be seen. It's not a heavyweight, but it has a big impact on sentiment. In fact, if SBI does really well, you never know, private banks, the large private banks, the Axis and the ICICIs may also start doing well. And remember, yesterday was a day for PSU banks, so to say, a bunch of those are flared up. Wonder what SBI numbers could do, and PAB numbers might also have something to do there. The only problem, as I see it, viewers, is that, I mean, was fun, of course, the China's virus flare up kind of ushers in oil demand fears. Remember, US also has that issue, but China is clamping down. There are lockdowns. People are being tested. Unlike the US, which is not able to enact lockdowns, China is firmly getting locked down. And that might bring in some fears for oil demand and therefore oil prices. And therefore, do watch out You never know what could happen. There was a bit of an upsurge in the ONGCs of the world. Could that cool off? That's the key question. That's why I bring that up. So do watch out for the oil sensitives. And by the way, viewers, much as we think that, oh, India's looking under control, we are opening up, Maharashtra has opened up, etc. 2 days ago, I'm bringing a 2-day-old story, but I'm bringing it because I think it warrants a caution amongst people who believe that all is hunky-dory, that the forecasters who predicted India's COVID peak now see a new wave coming. There's this story on BloombergQuint.com that you can go out and read as well. But there is an issue out there at hand that we might be entering a new wave of sorts, which might peak out by October. So if you are thinking that all is well, maybe not. You just got to be a bit careful. That's the only thing that I'm urging via this. Okay, yeah, this is the story. The forecasters who saw India's COVID peak see new wave coming. So please be careful. You may want to read this, of course, but please be careful about this. Okay, foreign investors bought yesterday, 2116. Banks doing well. Obviously, foreign investors have bought, or vice versa, whatever chicken and the egg thing. But yeah, FIs bought in about 2116 crores. And a bunch of numbers today, the most important one being SBI, the numbers and the commentary from State Bank of India, arguably the most important number of the day. Titan, India, idiosyncratic consumption, very different consumption name, so it doesn't really have a market-wide impact. The Adani Group twins will come out after Adani Ports and Enterprises yesterday. And I think what Apollo Tyres has to say about demand, or Tata Communications, which is a stock in news because of all the things that it is doing, or Subros, a big indicator of what auto demand is looking like. There are large suppliers to Maruti and some of the other CV as well for air conditioning. So all of that is important. Stocks to watch today, though, and it's a reasonably long list, but dominated by earnings, really. So one, BHARTI, AIRTEL. First, the key numbers. So revenue is better than estimates, margins better than estimate, which is all great. I mean, net profit fell, but usually people don't look at BHARTI, AIRTEL's net profit numbers too much. I thought the numbers had a few sparks positive to themselves, but I'm getting you the Goldman Sachs note because that kind of encapsulates everything that people may want to say. So they are keeping a buy with the target price of 675. I don't think there's a change as a result of the numbers because the whole street is bullish on BHARTI Airtel now for the last 18 months. At some point of time, it will move. Maybe this series could be it. By the way, I hear from some very informed people that this series could be the series for BHARTI Airtel and Macross new high. So be mindful of that. But Goldman Sachs is saying that they forecast the wireless segment to deliver 20% plus revenue and EBITDA growth for the next 2 years. They expect India business to be FCF positive starting FY22. Let's wait and watch. Marginally raised the FY22 to 24 EBITDA estimates by up to 2%. They're saying that they see upside risk to estimates in the event of the accelerated market share gains from Vodafone Idea. Well, that remains a clear and present opportunity for both Jio and BHARTI Airtel. Let's wait and watch. We dearly want this to remain a 3-player market, frankly, viewers, for our own good. But let's wait and watch. It becomes difficult for Vodafone Idea looking at the recent events. Tata Consumer, I thought the numbers were largely in line. Frankly, I'm not even getting a brokerage estimate out here. EBITDA margins were beat due to a good recovery in gross margins on a quarter-on-quarter basis, as well as international business, beverage business were low due to a high base. I think, a Morgan Stanley note, which is underweight Tata Consumer, if I'm not wrong. But yeah, I mean, largely in line quarter. There is nothing really. Some other results impact being seen in stocks like LG Equipment, wherein on a YOY basis, at least this revenues were up 71% and margins more than double. I don't compare stocks on a YOY basis. I don't believe that's the right thing to do. But because the reason I'm getting the YOY comparisons out here is that because if the stocks react, you know why they are reacting. So LG Equipment, Transport Corporation, PAT was up 10x on a low base of FY21. I think 4.7 crores was Q1 FY21, 47 crores was this quarter gone by, Q1 FY22. So interesting name. And IIFL Wealth, PAT up 43%, interim dividend of 35 rupees per share. Pretty strong showing, I thought. Let's wait and watch what happens there. Remember, wealth companies, you can still compare YOY simply because their businesses were not entirely shut off. There was a disruption, but not entirely shut off Q1 last year. So keep that in mind. Weak numbers for some of the mid caps and small caps. Pratap Snacks, Dhampur Sugar disappointed really. HMV, Everest Industries. And remember, in Dhampur a month back, we had spoken about how because of this split, a mid-sized company getting smaller may not really put it in a pole position when it comes to sugar. Now, every sugar company has a good ethanol capacity. So on there, most companies are equal, some are better than others. The differentiator about which company could do well would be the efficiency and the power that it has in the sugar operations. And Dhampur splitting into two kind of disrupts that. So be mindful of that. It's a very cheap stock, by the way, on the sugar side. If you look at sugar companies per se, Dhampur trades at maybe 5 times or less than 5 times FY23. Balrampur's is probably 11, Triveni is probably 8 or 9. So Dhampur is virtually half the valuation. Yes, it's done well, but just look at since April and May, it's been stuck in this range. So no moves there whatsoever. So it's not a very expensive stock compared to peers, but just that it has issues of its own, including the split. So you never know what could happen. And in terms of brokerage notes that stood out, I want to bring you CITI on Adani Ports. The numbers yesterday were pretty good, and CITI is saying that their rating is buy with a target price of 1,000. Remember, not that they've changed it. This was their tactical guidance some time back. They're saying that the FY22 expected underlying volume growth guidance increase seems conservative according to them. So they believe Adani Ports can beat it. The market share in ports business can take another leg up through acquisition of the Gopalpur and Karaikal ports. And they believe that the dominance in ports will continue to increase, and it remains their top pick, I think, in that space, not in the ports business, in that space, I think, is what CITI is trying to say, ports stroke logistics. So interesting note, it had a bit of a leg up yesterday. Let's see if there is more in store. Remember, in those whole set of Adani Group stocks, Adani Ports and Enterprises have weathered the storm. Some of the others have kind of corrected, but these two are weathering the storm very well and could be interesting. Let's see if there's a bit of a leg up. From highs of close to 880 or thereabouts, it's fallen quite a bit. Maybe there is more in store. And last but not the least, some stocks which did very well yesterday, just good price and volume action, just thought we'll bring to your notice. So Tube Investments had a big delivery buying, 5% gain. HDFC, super buying in trade yesterday. Trident continuing in the vein of some of the textile companies. I hear that Godrej Industries, smart money is picking it up, lapping it up. So do watch out for that. And Minda Industries, aside of the QIP, if Nitin Gadkari is making an appeal to passenger vehicles to include 6 airbags in the vehicles, Minda stands to gain. And maybe that is probably one other reason why Minda Industries had a 5% uptick yesterday. So those are a few that you might want to keep in mind. All in all, not a bad start, decent going, not talking on the index at all. But yeah, stock specific, some of these could do really well for themselves. But be mindful, the cases are on a bit of a upswing yet again. So you might want to be careful if you're stepping out. Thanks so much for tuning into the Trade Setup. Have a safe day ahead.